Welcome to a journey through the world of economics where we unravel the mysteries of central banks and their influence on the global economy. Central banks, the titans of economic control, are tasked with monumental responsibilities. They navigate the waters of monetary policy, manage a nation's reserves, and serve as the lender of last resort. These institutions hold the reins of our economic well-being, steering us through financial storms and prosperous times alike. Stay tuned to delve deeper into the history and evolution of these powerful institutions. To understand the role of central banks, it's essential to explore their roots and development. Central banks have a storied past, taking us back to the 17th century when the Swedish Riksbank was established in 1668. This was the first institution recognized as a central bank. It was created to restore the trust in the Swedish monetary system after the financial turmoil of the time. Fast forward to the 18th century, the Bank of England was established, playing a pivotal role in setting the blueprint for modern central banks. Over time, the concept of central banking spread across the globe, with each country tweaking the model to fit their unique economic contexts. By the 20th century, central banks had become key players in guiding national economies. They had evolved from simple institutions managing the currency and government's bank to complex entities handling monetary policy, ensuring financial stability, and acting as a lender of last resort. Now that we have a sense of their history, let's examine the key functions central banks perform. Central banks are the backbone of an economy, performing several vital functions. Let's dive into these. Firstly, central banks control the money supply, a function known as monetary policy. By adjusting interest rates and carrying out open market operations, buying and selling government bonds, they can influence how much money flows in the economy. This in turn affects everything from inflation to unemployment rates. Secondly, central banks serve as the lender of last resort. This means they provide financial support to institutions facing severe financial difficulties. It's kind of like a safety net that prevents a domino effect of bank failures. Lastly, central banks manage national reserves. They hold and manage the country's reserves of foreign currency, ensuring there's always enough to pay for international transactions, maintaining the country's financial stability. With these functions, central banks have a profound impact on an economy. Let's see how. Central banks are key players in economic stability, interest rates, and inflation. They act as the guardians of our financial system, ensuring that it remains stable and resilient in the face of unexpected shocks. This is done by monitoring financial institutions, implementing regulatory policies, and stepping in as a lender of last resort when necessary. Central banks also have a significant influence on interest rates, which in turn impact the cost of borrowing and the rate of inflation. By adjusting the base interest rate, they can either stimulate economic growth or curb inflation, maintaining a delicate balance between the two. Moreover, central banks play a crucial role in economic recovery and recessions. In times of economic downturn, they can employ various strategies, such as lowering interest rates or quantitative easing, to stimulate economic activity and aid recovery. These responsibilities are not without controversy. Let's look at some of the challenges and critiques of central banking. While central banks play a critical role, they are not without their critics. Some argue that their interventions distort markets, creating asset bubbles and moral hazards. Others contend that their monetary policies have unintended consequences like income inequality and financial instability. Critics also question the level of independence central banks should have, as their decisions can significantly influence political and economic landscapes globally. As we look towards the future, central banks face new challenges and opportunities. Technological advancements and new financial trends are changing the landscape for central banks. The rise of digital currencies like Bitcoin, for instance, has challenged traditional banking systems, forcing central banks to rethink their strategies. Simultaneously, advancements in financial technology are enhancing the efficiency and reach of banking services, potentially reshaping the role of central banks. As we move forward, central banks may need to adapt to these changes, embracing innovation while maintaining economic stability. The world of central banking is dynamic, and its influence on our economies is undeniable. We've taken a whirlwind tour of central banks, from their history to their future. We've seen how they shape economies, safeguard our financial systems, and even navigate us through economic downturns. Their role is pivotal, but not without challenges. As we move forward, the rise of technology and cryptocurrencies are set to redefine their functions. The evolution of central banking is a story that continues to unfold. Thank you for joining us on this journey. Don't forget to subscribe and comment below with your thoughts on the role and impact of central banks.